What's going on, guys? Man, we are in a bloodbath at the moment. We got AMD down 17%, we got Hood down 11%, Shopify down 7%, SoFi down 6.3%, Tesla down 4.5%. Guys, this is crazy, but it's a real opportunity. I just want to talk a little bit about what I think is going on. If you look back to the year 2000, you had the dot-com bubble. And that was based off of the infrastructure being built out in computers and people having computers in their houses. And the assumption was that if every house had a computer, that people would kind of not want to be using paper anymore. Like, let's say Yellow Pages, for instance, is a good example. So late 90s, the Yellow Pages starts making a transition from the actual booklet that you would get at your door to online. And the business went belly up real quick. And the reason for that was because not enough people had computers. The reality was they were expensive, people didn't know how to use them, and the infrastructure and software wasn't built up to the point where it could actually be profitable the way that the market believed. So hence the dot-com bubble, everything blew up. People made assumptions about the present value of the future earnings of the businesses, and they went belly up. So why do I make that comparison? I make that comparison because currently we're basically having what is called a SaaS sell-off, software as a service. Think of it just as software. And the reason why is because right now, the market, just like back then, was being driven by the expansion of the computer and people believing that the internet would sort of create the next boom. When in fact, it was actually the smartphone that actually built the infrastructure out enough that each person had a computer in their hands. That's when the real takeoff in the market began. Unfortunately, it coincided with a bad market, but you could see the subsequent recovery after 2008 until today. Right now, we have a similar and different situation happening. AI, for the past couple of years, has really driven the market up. That's a really good explanation for why politically things have been so difficult, and typically that would coincide with a stock market going down, but it's been going up as a result of the efficiencies created by AI, or better said, the assumed efficiencies from AI. And I think maybe that's what's going on. Hardware is different than software. Hardware is like NVIDIA, it's chips, it's physical things. It's like your computer, it's something you can touch. And if you look at NVIDIA, the explosion, even Broadcom and some of the other chip makers, they've gone up massively in value as a result of unbelievably increased sales, and creating technology that is honestly becoming world-changing and life-changing for a lot of people and businesses. So the assumption was that when that hardware got built out, that the next leg of this growth would be in software. It would be increased efficiencies for the bottom line, meaning that you would have higher revenues and better margins because you were able to save costs. But as we're getting these earnings come in here at earnings season, I believe what might be happening is that that's coming into question. And simultaneously, we have the midterms coming up. A lot of the older folks in the market, not older folks necessarily, but the old hat that's kind of at the top of the market is kind of getting worried, and they're going, well, if these two things coincide, maybe software actually isn't going to benefit as quickly as we thought, and we need to give it a bit more time, or maybe not at all. Maybe we're completely wrong about this thesis. So those things are selling off. Think of the stock market as a bunch of old guys between 60 and 80 who already have $50 million, who don't want to lose that $50 million. If anything comes into question, they're going to sell. You're not in that position. In other words, you don't need to preserve that right now because you're probably not 60 to 80. If you are, sure, you can take off a little risk, whatever you want to do. I'll tell you what I'm doing. So starting yesterday, I started selling some of my Nike because some of the defense stocks are going up. as a result, what you're getting is a massive drop in software in really, really, really good companies. I mean, honestly, what stands out for me is Robinhood. Honestly, I'd say it's still a little expensive, but the other one also, in terms of value right now, in my personal opinion, is first SoFi and then Shopify. So these are stocks that I'm buying. I'm selling a couple of other things in order to buy, just because I've sort of fully invested at the moment. So that's what I think is going on. I think there's a fear trade happening. I think that a lot of people that don't need to lose money are taking profits and just getting a little bit safe. And that's presenting an opportunity for the rest of us. So that's the reason why I'm making this video midday. I told you what I'm doing. It doesn't mean that we're out of the woods yet. It doesn't mean that things won't continue to drop. But we've had a several day drop of like precipitous percentages, like really high percentages. So in my opinion, we're closer to the bottom than we are to the top. In my opinion, not financial advice, just saying that's what I'm doing. That's what I believe. So yeah, I think that it would be a good day for me to pick up some more stuff. I'm gonna probably wait to the end of the day, and yeah, I hope the video's been helpful for everybody, and see you in the next one.